and my little girls have to take care of me someday as well. Where do you put your other parts of your money? If you own bonds, I would urge you to be very careful. We've had a 30-year bull market in bonds. In my view, that bull market will be coming to an end in the foreseeable future. If you own short-term bonds, or if you own special situation bonds, you'll probably be okay. But I would not buy long-term bonds, 30-year bonds. The 30-year bond in the United States, in my view, is going to be a terrible disaster. And I would not, if you own any very long-term bonds, I would urge you to go home and sell them. If any of you happen to be bond portfolio managers, I would urge you to get another job, because you're at the wrong place in the wrong time. Bonds are not going to be, long-term bonds are not going to be great investments. Stocks, well, stocks in the West have been in a big trading range like this for a decade or so. In my view, that's going to continue for several more years, maybe another decade in the stock market. If you're good at buying stocks here and selling them here, 2 or 3 or 4 years later, you'll make a fortune. We've had many periods like this in the past, and there were plenty of people who made lots of money in times when stocks were just doing this and going sideways. Yes, money can be made, but most people need a market that's going like this most of the time, you know, that's trending upward in a secular fashion. We have that market. We have a market like that now. It's called natural resources, raw materials, commodities. You can call it what you will. This bull market in commodities started in 1999. It's got many years to go, in my view. The reason we have the bull market in commodities is the same reason we've had several bull markets in history in commodities. This has happened many, many times in history, when you have long bull markets in commodities, followed by long bear markets in commodities, followed by long bull markets again. In the 80s and 90s, there was very little money invested in productive capacity to bring new commodities on stream. The last huge oil field in the world, the elephants, the last elephants, were discovered in the 1960s or before. The Alaskan oil fields are in decline. The Mexican oil fields are in serious decline. The North Sea is in decline. The UK has been exporting oil, was exporting oil for about 25 years. Now the UK imports oil again. Malaysia has been exporting oil for decades. Within a few years, they will be importing oil. Indonesia is a member of OPEC. They're getting thrown out of OPEC because they now import oil after decades of being a huge oil exporter. 15 years ago, China was the second largest exporter of oil in the world. Now they're the second largest importer of oil in the world. Oil fields deplete, mines deplete. There's been only one lead mine opened in the last 30 years. The last lead smelter built in the United States was built in 1969. So you can see that production of most commodities is under duress. We're having problems. Agriculture is even worse. We have been consuming more food and more agricultural products than we've been producing for the past decade. Inventories are now near historic lows. But the agricultural situation is much worse than that. The average age of farmers in America is 58 years old. The average age of farmers in Japan is 66. The highest rate of suicide in the UK is among agricultural workers and farmers, because it's been such a terrible business. Hundreds of thousands of Indians commit suicide, Indian farmers commit suicide every year. The average age of farmers in Australia is 58. All of you are probably reasonably well educated. I suspect very few people that you went to school with became farmers, because farming has been a bad business for 30 years. Therein lies the opportunity. Farming is going to be a great business, a great profession for the next 30 years. I try to tell young people these days not to go to Wall Street, not to go to the City of London, but to become farmers or miners, because that's where the action is going to be in the next few decades. We're having a major shift away from the financial types to the people who produce real goods. At farmers, miners, oil men, lumberjacks, that's where the future is going to be as Wall Street and the City of London continue into decline. So we have this bull market in commodities caused because very few people invested in productive capacity. Previous bull markets in commodities have lasted 18 to 20 years. This bull market may last longer because with all the things going wrong in the world, people are afraid to open new mines. People are afraid to expand capacity in agriculture or oil. So this bull market might last longer than previous bull markets. It's certainly got many more years to go. The International Energy Agency is going around the world begging people to listen that known reserves of oil are in steady decline. The Food and Agricultural Organization, the FAO, is going around the world begging governments to listen that we have a food crisis coming. Prices of food are going to go much, much higher. As far as mines and metals, it takes 10 years on average to bring a new mine on stream. So the world's got serious, serious problems facing it on the production side. That's why the bull market exists, and that's why it's going to go a lot longer. In my own portfolio, I own mainly commodities with a special emphasis on agriculture and precious metals. I own currencies because what I see happening in the currency markets, I have sold short. Selling short is something you do if you think things will be declining. You can make money when things decline. I have sold short shares in Europe, shares of American technology companies, and I have sold short emerging market shares. So I am, with my own money and my family money, we own a lot of commodities. You should take lessons. My little girls, by the way, have never owned a stock. They've never owned a bond. My little girls only own commodities. My little girls are very happy only owning commodities. When my little girls go to the playground, their portfolio beats the socks off all the other little girls because all the other little girls own other things which haven't done so well. So I would urge you to take advice from my little girls. I would urge you to teach your children and grandchildren Mandarin, Chinese. I would urge you to learn about currencies, especially what's happening to the dollar. And by the way, I own the US dollars at the moment, mainly because there's been so many people pessimistic about the dollar, including me. And I have learned in the investment world, when everybody's on one side of the boat, you should go to the other side of the boat for a while. So I own US dollars at the moment. I don't know how long I will own them, whether I own them for a week or a month or a year. I don't know. I hope I will be smart enough to sell my US dollars at the right time and get out and put my money elsewhere. But learn from my daughters and also learn about commodities, because in my view, this is a lot like the 1970s. For those of you who may remember the 1970s or have read about it, in the 1970s, stocks did nothing. Stocks were really not a place to invest. But commodities went up. Commodities went straight up throughout the 1970s. In my view, we're back in the 1970s again, where commodities are going to make a lot of money. Again, you can make money in stocks if you can buy them, and when they go up, sell them. But the big bull market now, like in the 70s, is in commodities again. So in my family, we own a lot of commodities and currencies, and we have sold short stocks around the world. If the world economy gets better, we're going to make money in commodities because shortages exist. If the world economy does not get better, and there's a very good chance the world economy will not get better, then the best refuge, like the 70s, is commodities. Again, commodities went through the roof in the 1970s, even though there were bad economies worldwide and bad stock markets. If the economies stay bad, governments are going to print more money. It's not the right thing to do, but that's all they know, unfortunately. So governments will print more money, and throughout history, when governments have printed money, you need to own real assets. Whether it's silver or rice, whatever it is, you need to own real assets, because that's the way to protect yourself when governments print money. So even if the economy gets better, we're going to make money in commodities. If the economy doesn't get better, I still want to own commodities rather than most other things. So take advice from my little girls too. Learn about commodities. There are many ways to invest in commodities, and perhaps you too will have a wonderful next decade or two, because that's how long the bull market's going to last. Now, I think on that happy note, why don't I stop? I can talk a long time about a lot of things, but what I'd rather do is let you ask questions, and let's talk about what you want to talk about. I think there's some microphones. Cornelia, are there microphones? I think there are microphones. And so if you will raise your hand, if you have a question, somebody will bring you a mic. Are there mics? I think our fearless leader, from direktanlage. Direktanlage? It's close enough. The CEO of direktanlage has the microphones. Are there microphones? Yes. Okay, if you have a question, raise your hand, and they will bring you the mic, and whoever has the mic, just start speaking. I cannot see you, so just start speaking if you have the mic. I see some hands. Whoever has the microphones, please take them around to the people whose hands are up. Oh my God, look at that mic. Oh, wow.
Mr.
Terry, yes, go ahead.
How to invest in commodities when banks fail?
Wait, say that again?
How to invest in commodities when banks fail?
Well, if banks fail, as I said before, they're going to print more money. You'll have, everything will go down for a while, but the things that will come up the most will be the commodities, because there's shortages. Food prices will come up a lot, and governments will print money. That's what they do when banks fail and things go bad. And just because banks fail, it doesn't mean the commodity prices can't go higher. The bank stock won't go up, but commodity prices can go up a great deal when banks fail, because of shortages and because of money printed.
But in which way? With ETFs?
Oh, in which way do you buy them? Yes. Well, there are lots of ways. I actually own the Rogers Index through Royal Bank of Scotland. I prefer to invest in indexes. Many studies have showed that, and by the way, if you have a question, raise your hand so she can come to the next person. Don't hit anybody with that. Many studies have showed that index investing outperforms individual investing, active management. If you are good at picking individual investments, yes, you should do that. But studies show that index investing in indexes, outperforms 70 or 80% of the people year after year after year. I use these indexes. I know how well they perform. You see some of the charts which were shown before. So I use index investing. The Royal Bank of Scotland is owned by the British government. It could fail, but if it fails, England the UK has failed. And if that happens, a lot of other people have failed much worse before that happens. Yes, go ahead.
In your book, you recommend your kids, they have to have a dream. What is your dream?